the third quarter of this year when California foreclosure surged 228%. In August of this year, we had 101,000 foreclosure filings, the most of any state again, and that is one filing about every 30 seconds. Our economic recovery cannot begin until we stem the wave of foreclosures. We can't just keep giving unending amounts of money to Wall Street firms with a trickle-down solution. We need to help folks on the ground. We need a bottoms-up solution. We need to help more than just Gordon Gekko, the banker. We need to help Joe, the homeowner. That's what we're about to do. And let me first thank the governor for agreeing to the Assembly Democrats' request to have mortgage reform and foreclosure prevention as part of the special session. We're going to go forward with the foreclosure prevention part. We think the governor's proposal is sound. Basically, he has announced a 90-day moratorium for homeowners to work out loan modifications, and banks can avoid that moratorium if they have a comprehensive loan modification program. We're going to build upon that proposal, and we're going to institute a 120-day moratorium because we believe that gives additional time for homeowners to work things out. We've heard from consumer groups and hearings that Chairman Nava has chaired that there's still a lot of runarounds that homeowners are getting when they try to work out their loan mods. So we believe 128 days makes more sense. Banks can avoid this moratorium if they have a comprehensive loan modification program that follows the criteria set forth by the FDIC. And part of that criteria is what they call the 38% solution. If we have homeowners give 38% of their income under this debt-to-income ratio, then we will modify the loan to achieve that ratio, taking into account interest and taxes and the premium payment as well. We can modify loans, or actually the bank's loan servicers will have flexibility to modify these loans through many different ways. They can freeze interest rates, they can reduce interest rates, they can reduce the principal, or they can extend the term of the loan from 30 years to 40 years. We would then have the Secretary of the Business, Transportation, Housing Agency to certify that the banks have this comprehensive loan modification program. And if they have that, then they can avoid this 120-day moratorium. And finally, we'll have oversight, reports to the legislature, and other accountability standards to make sure that the banks are doing what they're supposed to be doing. And finally, want to note that none of these loan modifications are costing a dime of taxpayers' money. The people getting the haircut will be Wall Street firms and state chartered institutions. That's the way it should be.